A very good afternoon. Let's take a look at the markets. Asian markets traded mixed. Positive sentiment was driven in China's market on the back of US and Chinese officials indicating that they'd agreed not to go back to the triple-digit % import levies they laid against each other in April. But Japanese stocks took a tumble on a stronger yen currency and after Donald Trump threatened to impose a fresh tariff rate on Japan, responding to Japan's lack of willingness to import US rice, as well as an outstanding issue on the automobile sector. The Nikkei share average declined by 1.24%. The Hang Seng Index closed down by 0.87%, while the Shanghai Composite Index rose by 0.4%. US stocks continuing on their winning streak, extending solid gains since as seen in the previous week. It's believed that a stronger stance on tariffs by the US government had helped to now shift investors' attention to the possibility of lower interest rates down the line by the US Fed Reserve. The S&P and Nasdaq reached yet another record high. The Dow Jones Industrial Average rose by 0.63%. The S&P 500 advanced by 0.52%, while the Nasdaq Composite Index gained 0.47%. Looking at the local indicators, we see that the All-Share Index is up 0.6% at 97,045 index points. The Rand is trading at 17.58 against the US dollar, 20.78 vis-a-vis the euro, and 24.23 against the British pound. In terms of commodities, we see that gold is trading at $3,346 an ounce, platinum at $1,348 an ounce, while Brent crude oil is trading just above $67 a barrel. All right, let's get into it now with Martin Smith. He's a portfolio manager at Anchor Capital. Thank you so much, Martin, for joining us. So there's talk around President Trump putting gentle pressure on Fed Chair Jerome Powell to leave office sooner than his scheduled May 2026 exit. I mean, isn't this something that investors should be concerned about, as clearly Mr. Trump wants monetary policy to be in line with his will, which then calls into question the independence of the US Fed Reserve in future if indeed Mr. Powell is forced to leave?
I think you've hit that nail on the head there. But look, it is supposed to be two kind of independent roles. So the thing is, you can't force him to leave. It's kind of ironic that he was the one that first brought Powell in all those years ago. So, excuse me, so that's quite interesting. But what he is doing now, President Trump, is he's looking to appoint a successor. So Powell's term ends in 11 months. And usually it's about 3 or 4 months before the term ends that someone else will be announced that will come in. President Trump wants to do that a little bit earlier now. So the market can then start to price in what the new person is going to do and kind of take a little bit of the power away from Powell. So interesting dynamics there. But for now, independent roles, and I don't think Powell's going to leave before his 11 months are done, but I think Mr. Trump or President Trump is going to do things to sway things in his favor because he obviously wants cuts and pricing of cuts to be implemented a bit quicker than Powell.
Yeah. So US markets continue to hit, these all-time highs. They basically hit an all-time high in the second quarter. We're now in the beginning of the third quarter. Do you think that there are any threats on the horizon in July, maybe the 9th of July, that could actually scupper this good run on US markets?
Yes, I mean, the US market has just had so much momentum behind it, and it just keeps climbing and climbing, and it's been quite difficult to invest new funds into it because you had valuations that are still quite stretched. So it still looks quite expensive. But like you mentioned, it keeps ticking up and grinding higher. But yes, there definitely are some kind of potential worries and risks that may or may not play out. Obviously, geopolitics are a little quieter now than they were a month ago or a couple of weeks ago. But let's see how that plays out. You've obviously got the 90-day tariff story that comes to end, like you mentioned, on the 9th of July. So let's see what happens with that. And then you've obviously also got things like US economic data and inflation and those things, which also might point to a different story, and also how tariffs impact those economic kind of data points. So these are all things that are kind of in the background, but you've also got valuations that are a little bit expensive. So that's on the one side. On the other side, the economy still looks relatively good, and there seems to be a lot of momentum and tailwind. So it's a very, very tricky market, but one I think I'm going to have to watch very carefully because it could kind of go either which way in the next few weeks.
Yeah. So, I mean, many of your ilk have been saying that the local bourse has been doing quite well, you know, outperforming international bourses in terms of performance this year. And we see that we're through the 97,000 index points level. Where do you still see value on the South African market in terms of if you have a little bit of money set aside and you want to invest, where do you go? What sectors would you be interested in?
So, I mean, if we look at the main contributors of why the JSE has done very well at the index level, it's been the NASDAQ process kind of stable. And then you've got gold and more recently platinum stocks doing incredibly well. So that's pushed the index up much higher than kind of global counterparts. You've also had a stronger rand. So in global terms, in US dollar terms, you've actually done very, very well. But I think if you look at where the value is, it's probably in the SA Inc. side of things. So I'm talking your banks and your retailers, especially if this currency continues to strengthen or the dollar continues to weaken. I think you could see some catch up from those stocks. Because again, it's been mostly gold, platinum, and NASDAQ/process led the rise that we've seen kind of year to date. So I think you'll see some value in the SA Inc. side of things.
Yeah. One last one. Capitec CEO Harry Fourie, he's going to be leaving the joint on the 18th of July. I just wanted to get your impressions of how Capitec has evolved under his tenure.
I mean, Capitec's an incredible story from a South African business perspective. I mean, it started out kind of just in the lending space and has grown into one of the biggest banks in the country. So, or even in Africa. So, I mean, it's been an incredible story, and the evolution has been there for everyone to see. And they kind of go from strength to strength. From an investment kind of case, sometimes it's been a bit difficult to buy them because they've been quite expensive from a valuation perspective because they've always had the growth kind of behind them. But from an evolution perspective, it's just been a really good South African success story. So, yeah, one for us to be proud of, I guess.
Indeed. All right. Thank you so much for your time and insights, as always, Martin. That was Martin Smith.
You.
He's a portfolio manager at Anchor Capital.